Well, I cannot read the chat, but if you want to confirm it, if anyone.
Yeah, bro. I can see.
Okay, solid. Okay, so I'm gonna repeat again the blog that we did. I think it was Sunday. Yeah, Sunday at the end. Because I know this is something also I will be repeating myself over and over in previous calls, but I know this is something that at the beginning, if I think most of you guys, haven't traded in smaller time frames, so that's something you need to get used to with time, training your eye. So we'll go over again, so everyone can get it, can grasp all the concepts that we taught in this blog. So, okay, so just to summarize again what we went over, this is gonna be the smaller time frame blog. Okay, so how we're gonna play a smaller time frame? I remember last week people were asking exactly, okay, when we are in a downtrend, right? Let's put again the downtrend scenario. Then let's say we have our IFC candle right there. Okay, with let's say we have imbalance right there. Okay, now we know all this section right here. If we are in a downtrend, this is gonna become our point of interest, our supply zone, and our IFC candle to play off, right? So again, we're in a bearish scenario. We know we have a point of interest at higher levels. How do we react? Let's say this is H1, okay? So if the black line is H1, we know this IFC candle right here can have different imbalances in smaller time frame, right? So this is the reason why we don't place our entry based on the open and our stop loss based up there, because that will be, let's say, a 20 to 25 pip stop loss in a normal pair, let's say like euro dollar or anyone like a dollar pair, right? So again, we're gonna look for 4 things when market retraces to these levels. Okay, again, if you remember, guys, every time we see something like this, just to refresh it, this will be a complex pullback. Okay, we're always gonna focus on the point here called lower high that actually created a new lower low. Let me get back to the Zoom. Okay, so again, always remember our structural points are going to be really important. The one actual lower high that creates the actual lower low, okay? And that's going to be our main focus, being our bearish leg, this one right here, okay? After knowing that, we have a point of interest, and we let the market retrace and come inside our levels, okay? When we come to these levels, again, we're going to have, let's say, for example, a smaller point of interest right there, maybe based on a M1 imbalance, and maybe we have slightly another one higher, okay? So which one do we choose? Do we put a limit here? Do we put a limit here? Or we just let price come in and see what's the reaction that give us in a M1 time frame, right? So there's going to be 4 things that we're going to be looking for when the market enters this point of interest supply zone or IFC candle, okay? The first one that we're going to be looking for is once we enter these levels, it's going to be just a normal head and shoulders, okay? So that's going to be the first one. Okay, maybe the other day I said it in a different order, but doesn't matter. First one that we're going to be looking at is the head and shoulders. Let me put it like this. Okay, so we'll have our IFC candle. Let me put it black like I normally do. So we'll have our IFC candle right there. Our entry will be based on that one. based on M1, and our stop loss is gonna be based on that one, okay? Being this our IFC candle based on M1 time frame, okay? That way, what we're doing is, okay, I'm allowing the market to come here to our first point of interest, but if the market continuously comes to the upside, he's not even showing any sort of intention of going lower in a M1 time frame. So always remember, what's the first time frame that the market will show some interest to align, let's say, with our H1 time frame in this case? Okay, the first time frame that will have to start showing us bearishness is gonna be M1, and that will lead to M5, and that will lead to M15, and then when it's aligned, probably it's because we'll create a new lower low. Okay, so that's gonna be the first one, our head and shoulders. Our second one is gonna be, we let the market come in, on our point of interest, and then we just have 1, 2, 3 drags to the upside, being this. Being this a distribution, okay, so number 2, distribution. Okay, the same is gonna be on the contrary. If it's a bias scenario, it will be an accumulation. Okay, it's gonna be the other way around. And again, we'll have our IFC candle being this Utah entry will be based on that IFC or that Utah candle, and stop loss again based on that M1 time frame. Okay, that's gonna be the second one. I'm gonna leave just 5 seconds so everyone can write it down, and then we'll move into the third and fourth one before start to look to examples. Okay, perfect. Let me erase this one. Probably everyone have written it down already. Okay, number 3. Okay, this is gonna be the market again comes creating higher lows and higher highs to our point of interest. Then we have a new push that we enter our supply zone, IFC, or point of interest, and then we have just a normal higher low, higher high, break of a structure, IFC candle, entry, stop loss, and that's gonna be the third one. Okay, that's the reason why it's so important market structure, because we have to properly identify when are we really breaking structure. Let's say if we don't understand how structure works on a daily H4 and H1 time frame, when we move into lower time frame, we're gonna be lost. And that's the reason why we structure it this way. And the first day on the blog, we just teach it until M15, so you guys can get a concept, the concepts and a grasp of it. And that's the reason why now, if you properly understood market structure, if not, don't worry, I will do extra calls. This is gonna be one that is actually number 3, is one of my favorites. You will see it play so many times in M1, and so that's why it's something we use a lot. Okay, so number 3, this is gonna be just a proper break of a structure. And just to finish, number 4, market comes to our point of interest, we leave equal highs, make an FU candle, break of a structure, again, FU candle, most of the times we'll leave a break of a structure or equal lows, and then after that, our FU candle is right there, entry, stop loss, Okay, later on again, I will show you an example in a bias scenario that I had for AUD USD that I take a loss this week. High probability setup. I will play that all the times that happen. In this time, I take the L, but again, most of the times this will play in my favor. And it was based just on the contrary, equal lows, FU candle in M1, and now I was playing from the M1 time frame. But of course, based on also a structure and everything based in H4, H1, and the rest of the time frames. So perfect. These are the 4 examples that we are going to be using on a smaller time frame. Okay. And again, just to repeat, this is what we're going to be looking at when we have different point of interest inside an IFC candle. Okay. I will show you now examples in the graph. How the market, when it comes to this point of interest, which one do we choose? The first one? Do we choose the second one? Or do we cover everything? So what we notice is that if we understand and play correctly this smaller time frame, and you will see, you will be lowering your stop loss 30, 40, 50, even 60%. And that's a huge advantage on your trading. Again, I think you guys remember, I'm going to do it again really quickly. I'm going to come here. This is an example that I showed you guys the other day based on H4. Okay, the time frame is H1. Okay, but this was my last H4 higher low, higher high. Okay, this is my last push. Everything inside is going to be a complex pullback. And the reason is because these levels here that were actually creating new higher highs compared to my last one, they were not creating a new higher high compared to the true higher high, which is this one. And that's the reason why we cannot consider this higher low and higher low, just to make a quick review of it. Okay, so after that, probably in M30, M15, it was, but not in H4. So again, we have a complex pullback. You see how we create equal lows right there. We tap into an M1 imbalance right here. That's why I put back test where it tapped. And after that, we had H1 trending to the downside, creating lower high, lower lows. And we have a break of a structure in H1. So now we have H4 and H1 are aligned. After that, we have another point that creates a new high compared to my last one. So now this point here, okay, let me erase it really quick. This point here now is confirmed. So now we know that's our last higher low that created my higher high. Okay, so everything that moves inside is going to be, again, remember, my complex pullback. Okay, I don't care how it moves, but everything is going to be inside. And look how sometimes you will see it taps one time, comes again, and then this one flew to take those equal highs. Okay, so just knowing this, now we had a point of interest right here based on M15. Okay, this one here was based on M15. And now let's go to smaller time frame. Here. Okay, so now when we go to a smaller time frame, look exactly what happened. Okay, this is one of the options that I just showed you guys of the 4. The market comes exactly to my demand zone, structural point of interest, whatever you want to call it. And this, we are creating lower highs and lower lows. The moment we tap inside our demand zone, market breaks a structure right here. Okay, so now we create a new higher high. So everything that moves inside this push now is a pullback. So let me go for a second here. Let me zoom in. First entry after the break of a structure. Entry, stop loss. Okay, first of all, again, look how much are you actually reducing your stop loss. Probably 50% of it, because this will be placing it just below my structural point. Okay, after that, this point here reacts correctly, creates a new higher high. So after we have created a new higher high, then again we look for what? We look for my last IFC candle imbalance that created the push right there. My stop loss right here. Again, point out something. Do you see how I always put London session? The reason why I put this is because that's something that I back tested. I know when US dollar likes to move this way. This doesn't not mean that you're not going to see this in another time frames, but really important when you guys are back testing, that will show you how always just point out what's the time that this happens. Okay, you just put London session on your journal, you move on London session, New York session. That way, you're creating a lot of data. 6 months from here, now you will see euro dollar playing exactly the way you like. Knowing this for a smaller time from confirmations, knowing structural points, knowing IFC candles, and now you also have a time zone that you know that, let's say, 80% of the times euro dollar will play right here. Okay, also this is really important because maybe most of you guys are really busy like we are, so you are not gonna be at the screen 24/7, right? So this is something you guys gotta point out, because later on you can work, let's say, on, okay, I'm gonna be trading just London session because I know it fits my schedule, and I know that when euro dollar plays in London session, it can give me a 1 to 10, 1 to 20. So whatever is the number. But maybe for most of you, you have already a decent account that can be probably worth 20K, 10K, just based on that. And if it doesn't play in your time zone, you know you're not going to be in the screen, so you don't play it, and you just journal it. Okay, again, this point here, this is M15 and H1, both sharing same structural points. Okay, but this is M15. But this is going to be something that you will see that happens a lot. So after this, you will see M5 fails to create a new high. We break a structure. We still have a lot of imbalance down here. All this level that needs to fill. Okay, so now where do we come? Come right here. After this point here creates equal lows. Again, another entry right there. Okay, but the important thing, that will be counter trading. After that, now we have a point of interest right there. Okay, right there. Okay, after we react from it, look, if we need to put our stop loss, and this is something you guys to check, if we put our stop loss based on smart money concepts that probably some of you knew before coming here, this will be your entry and this will be your stop loss, right? All this big zone right here. Okay, if we base it on M1 or M3, you just play from the reaction, you just wait for what? This is again another break of a structure example. When we break my last lower high that creates my last lower low, perfect reaction, close the last imbalance. We see that maybe we had a small right there, but most of it was filled. And after that, if we check, this point here took care of that candle. Sorry, this point here took care of the black candle after engulfing. So that imbalance is filled. Was my last one. In this case is right there. So that's your entry, and your stop loss, your red line. Okay, just to show you guys another example. Right here again, this is again euro dollar based in M5. You see the market creating new impulses to the downside, lower highs and lower lows. We break a structure to the upside. After that, where do we come? Entry here, stop loss here. That will be one option. Okay, another option is maybe covering everything, because you guys can see how we have slightly an imbalance right there. Or another thing you guys can do is play 0.5 risk right there, and then play 0.5 risk on the below one. So you split your risk in your both entries. That way your stop loss on on this one, on the higher one, is never going to be like 10, 15 pips stop loss. It will be like 3, 2, something like that. So probably it's worth the risk, and probably it's worth taking the L on this one. Second. Taking the L on this one, 0.5%, but then if this plays, it will cover it and much more. Okay, so that's euro dollar again. This is another example of momentum trend line. We have a nice point of interest where the market created an IFC candle that probably will react from something else on probably H4 or daily or whatever. And after that, everything that left in balance, all that push when the market comes, consecutively creating new pushes to the upside. But once we enter in that zone, okay, the market, first of all, breaks a structure right here, on this push right here. But after that, this point here breaks the momentum trend line, leaving our refined IFC candle right there, the black one, enter the stop loss right there, and you can exit this. Let's say on this imbalance will be already like a 1 to 12 on this one right here. Okay, I remember I explained this one this is Euro AUD. Okay, this played. I knew Wally bought it. I missed the buy. He sent it for students. I remember. I think he saw like a break of a structure on M15. He took it from here. It had potential that we were accumulating, and actually it did. So then we broke all these highs right here. But what I was looking for is I had an H4 point of interest right there, and I had slightly another one right there. So I was, okay, which one do I pick? Okay, instead of picking and putting just sell limits on my point of interest, I just left the market, came here. Okay, so when it came, I remember there was New York session. I'm inside my zone that I like to play. And again, when this happens, what do I do? First of all, if you guys can see first, the market, first when we enter, it also created one of our patterns. If we throw it like this, head, left shoulder, head, right shoulder. When this happens, we have right here, in a smaller time frame, probably a little bit lower, we have a small break of a structure. That will be your entry. That will be your stop loss. Okay, nice push. Then we see we broke even. After that, the market comes again inside. Okay, this is why it's important this played out a little bit, but let's see what happens. The market comes again. That does not mean the trade is invalid. Probably we're feeling just another points of interest, and this was just the first one. So after coming right there, we zoom in. This point here creates a new high. This point here creates a new high. And now we start to fail to create new highs. This is failing, and this is failing. Okay, but we are just looking, because right now I can't assume that this won't be a complex pullback and end up creating a new high. So I'm just waiting for the market. Always wait. The market will give you an answer when this happens. So after that break of a structure,